Hi there, my name's Gordon Farragher. This recording looks at the difference in the treatment of trading losses between a company and an unincorporated business. So, if you have a trade and you lose money, what can you do with that? Well, the first thing to say is in your trading profit box in your tax return, be it a corporation tax return for a company or the income tax return for a sole trader, you put 0. You can't put a negative figure in for a loss. You simply made a profit of 0. But then you want to see if there's anything you can do with the loss to net it off against other income. Now, with a company, you can relieve any other taxable income you've got in the current year. Your trading profit will be nil, but you might have non-trade loan relationship income, property income, capital gains, anything else that's subject to corporation tax, and a trading loss can be set against it in full before deducting any qualifying charitable donations. With the sole trade, the rules look very similar. You can relieve any other income you have in the current year, be it employment income, dividends, interest, property income, anything like that. Again, you must relieve in full before deduction of personal allowance. Then, with a company, you can go back and you can relieve total income of the prior year. Again, if you choose to do this, you relieve in full before deduction of any qualifying charitable donations. And with a sole trade, again, it looks very similar. You can relieve your total taxable income of the prior year. But there is a very subtle distinction. With a company, you must relieve current year before going back to the prior year. With a sole trade, there is no such requirement. With a sole trade, you could relieve current year only, prior year only. You could relieve both in either order. But with a company, if you want to carry back to the prior year, you must relieve current year first. If you have any loss left with a sole trade, you carry it forward and you set it against future trade profit. That is an automatic set-off in full against the next available trade profit. Now, for losses arising before April 17, the rule for a company was exactly the same. However, for losses arising after April 17, you can carry forward to set against future total profits. And for the carry forward of post-April 17 losses, the set-off can be restricted if you want. For companies only, all losses carried forward, both pre and post-April 17, there is a capping on the amount that can be set off against profits, and the cap is £5 million plus 50% of the excess of the profits you're relieving over £5 million. Now, what other reliefs have we got? Well, in a sole trade, you've got a special opening year relief. Any losses arising in the first 4 tax years, you can carry back and set against total income, taxable income of 3 years ago, then 2 years ago, 1 year ago. It's a unique tax carryback in that it's on FIFO. Pretty much every other carryback in tax you'll see is on LIFO. This one's on FIFO. You jump back 3 years and then come forward. And like the current year and prior year relief, you relieve total income before personal allowance with no restriction. For companies, there are no opening year rules. Doesn't exist. With a sole trade, if you cease to trade, any losses in your final 12 months, you can carry back 3 years on LIFO this time, but this relief is against trading profit only. With a company, if you make a loss in the final 12 months, you can carry back 3 years on LIFO, which seems the same, but you relieve total income, total taxable income. Again, in full, no restriction. With a sole trade, if you end up setting a trading loss against non-trading income, that is what they call sideways loss relief, and that can apply in the current year and prior year relief and also in the opening year claim. The maximum amount you can relieve in a year is the higher of £50,000 or 25% of your income.